afternoon. Masa al khair. It's great to be here and give a short keynote as an introduction of the European part of today, really focusing on the investment market and in particular on transactions, what's happening in the markets, what are trends, and is there a turning point today in the market for transactional activity. I've split the keynote in three parts. So first we're going to have a quick look at trading fundamentals, arrivals, data around RevPAR. Then we're going to hone in on the investment market, transaction volumes, sources of capital, types of transactions, what are people, what are investors looking for, what have they acquired, and then we conclude with an outlook for what we expect to come in the rest of the year in 2025. So, diving straight in to the fundamentals and particularly arrivals. So if we look at 2024 and the forecast for the year, we expect that on a whole, so for Europe, trading and arrivals will have recovered to pre-COVID levels, showing a 9% increase year on year. And this trend is expected to continue into 2025 with another 8% growth. And then next year, almost all of the countries on an individual level will have recovered as well to 2019 levels. Post-COVID, what has really driven growth and recovery were one, short-haul domestic travel, and two, leisure. Whereas now we're really seeing a pronounced recovery also in business travel. So 18% year-on-year growth is forecasted for 2024 versus only 7% in leisure. And we expect that both leisure and business actually will have recovered by the end of 2024, which is a year earlier than what we anticipated, really showing the resilience and the strong momentum in the hotel trading markets. Sectors to recover still is more longer haul travel, particularly Asia Pacific and Middle East. Year on year, we anticipate arrivals from Asia Pacific to grow by 30%, which is a very strong recovery. And then have recovered fully by the end of 2025. This is the same for Middle East. But in the Middle East, slightly different pattern for this year. Arrivals softened somewhat, but we anticipate that for the end of next year, that arrivals will have recovered again to 2019 or pre-COVID levels. What does that mean for hotel trading performance? If we look at the first 7 months of this year, year-to-date July, we can see, there's an 11% year-on-year growth in RevPAR revenue per available room, and the same figure on a rolling 12-month basis. We do see that trading and performance or growth is slowing, growth is normalizing. Which is actually also a good sign for the markets overall, and then particularly the markets in Southern Europe, Greece, and Spain showed really strong growth figures. So what does that mean then for investment? I think there is strong momentum in the hotel operational markets, growth normalizing. Which is actually, from an investment perspective, from an investment purview, quite positive, and that's also evidenced in transaction volume. So, if we're looking at the first 6 months of this year, we see a phenomenal growth over last year, 66% up year on year, and we're almost, 21% below full year volumes of last year, which is a very strong recovery. So actually when we go back to 2020, which was a worse year for obvious reasons. We did saw some rebound in transaction activity in 2021, which was also when trade started to recover a bit, and investors took a view on the market. But then the capital markets, interest rates, inflation caused bid-ask spreads to widen and transaction activity to decline. But that is now really on the rebound in Europe. Where is the capital coming from? Sources of capital. This graph shows actually all cross-border capital flows globally, of which EMEA receives the vast majority, 64%. The US globally is still the largest exporter of capital, followed by Singapore, the UAE, and the UK. I think a couple of other interesting observations from this data and from the graph is that actually capital from the Middle East, you see that on the right bottom, has a strong focus and preference for hotels. The horizontal axis shows a percentage allocation towards hotel versus all other asset classes. So US the biggest exporter of capital, and Middle Eastern capital actually strongly focused on hotels versus other asset classes. This is the outcome of the most recent Global Investor Outlook survey of Colliers, which shows a very strong preference towards luxury lifestyle experience, so the driven hotels as well as urban locations. And if you look at what transactions took place, larger deals, the likes of Blackstone's acquisition of Village, Starwood Capital acquiring Edwardian Hotels, as a really a trend towards that luxury lifestyle type of hotel. And another actually interesting observation boding well for our sector is the shifting preference from investors from other asset classes towards hotels. Actually, also this shift is most evident in EMEA. So whereas the long-term, so the 10-year average, the proportion of hotel investment was around 7% of total volumes, but that since 2022 has started to shift up the yellow line and currently stands at around 13%. So it's a very positive development for hotels and attractiveness of hotel real estate versus other types. So what does that all mean for the future? What do we expect, and will that momentum continue into next year? Another sort of outcome of our investor outlook survey is that hotels were actually the only sector where there was a consensus view by investors, and a positive one, that there would be more upside to capital values in hotels than downside. Hotels were the only asset class that showed that, and that is really fueled by the underlying trading fundamentals and quicker and stronger than anticipated rebound after COVID, which was for our industry really a moment where unprecedented, where we went from zero, no trade, closed hotels, to back to where we were in 2019. So we have a strong momentum in operational markets, but what is also very important is that that goes hand in hand with a positive trend in the capital markets. And that is also really something that we are experiencing today. So interest rates are being cut again. The real estate yield spreads, so the yields and the interest rates, the spreads are improving, will even widen more into 2025, which will bode well for deal making and transaction activity. And the most recent rate cut by the Fed by 50 basis points was a very important moment also in the markets, where usually the Fed is sort of ahead of the Bank of England and the ECB. Now is a bit behind, but is now really starting to to also cut, which is very important also for confidence in the market for investors. Fundraising activity then is also kind of bottoming out, and fund closings are standing at a 12-month high again. But what's very interesting to see here is that actually the large allocation of those funds towards operational real estate and hotels, around 30%. So a lot of capital available looking for a home into hotels to invest in. So bringing it all together and recapping it, I think strong positive momentum into the operational hotel markets, in tandem with a positive momentum in the capital markets, and more capital available for hotels is a positive dynamic. Luxury experience-driven real estate hotels are favored. The focus shifting a bit from RevPAR, revenue per available room, to revenue per square meter. So really optimizing all areas of the hotel and such, enhancing the values of real estate. There's a continued opportunity for M&A, strategic partnerships, consolidation in the sector. An example, PIF taking a strategic, making a strategic investment into Roccoforte, for example, to fuel their growth, is an example. And then lastly, also a big opportunity in my mind is sort of the more conversion, the brown to green. So also where buildings need to optimize their ESG, not just environmental, but through hotel operational strategies. And really that sort of hotelization trend, where all real estate becomes more operational and more service oriented, I think is a tremendous opportunity for hotels and our sector in general. So thank you for your attention. Hope it set the scene for the afternoon a little bit, and I'll take any questions now or later. Well, thank you. Sorry. Microphone?
Hi, good afternoon.
Hello. Hi.
My name is Dina Kamel. I'm a reporter from the national newspaper. I'm sorry, I caught only the tail end of your presentation, unfortunately, of what seemed to be a very interesting and detailed research. But I was just wondering, based on some of your research findings about investment and capital towards the hospitality industry, I wonder if you could tell us at all if investor appetite has been dampened in any way into the Middle East hospitality market because of the geopolitical tensions and wars that the region is undergoing for the past year, and which are intensifying and widening. What have you seen the impact across the hospitality market from that in terms of capital?
So you're specifically referring to investment into the Middle East, is that right?
Yes, correct. I mean, I caught the tail end of your presentation.
Yeah,
I assume
no
that's
problem.
what it was largely about.
Yeah, no, the focus of my presentation was on Europe, and particularly capital inflows from other regions, including the Middle East, into Europe. Typically, no, that's okay. No, there is transaction activity and really a lot of deal making in the Middle East. It's less than call it Europe or the US or Asia. There's a lot of capital being exported from UAE, from Saudi Arabia. And has that, it's a difficult question to answer. So if the events have impacted really that investment activity, it's not really been a focus of my presentation, but.
Fair enough. I apologize. Thank you.
No, thank you.
Can I have a mic, please? Okay, Larissa, thank you. No, it's It's not? Still not? Okay. Larissa, thank you so much, but I have a question. Do you see any regions within Europe where investors have more focus? Because it used to be pre-COVID, it used to be always city hotels, always kind of the same type. You showed us now that it's different in terms of the product. What about the locations?
Still, Marina, very strong focus on cities, urban hotels in cities like London, Paris. That hasn't
The key
changed.
cities.
Yeah, because of COVID. The UK is a big recipient of capital and investment. I think Spain still also, but yeah, that focus hasn't changed much.
Okay. Thank you very much.
Thank you.